So we often get asked about the GST or HST, or in the case of provinces with PST, with respect to accepting those sales taxes in barter, and then what happens? The government doesn't accept barter, and that's quite true. For the sales taxes you collect in barter, you do remit them in Canadian dollars. For those GST or HST, when you pay for business expenses in trade, and those taxes in trade, then you're getting an input tax credit for trade, essentially. And so if we were to look at a quick little thing here, I think I can find it. A lot of business owners don't necessarily work on the GST, HST return, and so we're just gonna look at a draft return here that I've completely made up numbers for this fictional business and kind of what their numbers look like. So in their cash and trade sales during this period from April till August, obviously a very unusual period for a sales tax period. Normally speaking, you're either on a quarterly, monthly, or annual reporting period. And so I've created this thing, and I'm going to recalculate because actually I think we processed more transactions in my business year. So yeah, so this particular business during this period, cash and trade, has spent $34,000, has collected in cash and trade $4,420 in GST, HST, and based on the expenditures that we had processed through this business, they have input tax credits of $5,700 right here, and so that is on the expenditures that they have. Obviously I can make adjustments, I guess, in terms of that, but let's see if I can get a breakdown of the input tax credits. I'll have to go to the actual file. We'll go there in a second. But those input tax credits also are a blend of cash and trade based on, in this case, I had some construction projects that were going on that kind of outweighed the normal sales revenue. If we wanted to make this look more like a typical where someone is actually paying is in sales, paying out the tax, because generally speaking you're not getting a credit back unless you're in a period where you are having a massive launch. So let's say you borrowed $1 million and all of a sudden you're spending on advertising and a new construction project, and you have all these input tax credits from all the expenditures, then you actually get money back from the government. But in a typical cycle of a business, you would be paying out unless you are having financial challenges and having more expenses than revenue, which is not a good place to be. And so we're just going to make up a customer here. We'll lickety split, actually. Let's use him to put more through, more sales. And we're just going to say he does $50,000 in sales, which is going to generate another $6,500 in tax. And we're going to save that. And so now if we look at that same tax return, edit draft, and we're going to refresh that based on that additional sales. And so now you're looking at more of a traditional return that you would see, where your GST and HST collected during the period, whatever that period may be, is larger than the input tax credits that you have. And so that you owe a check or a credit, or check basically, or a draft or EFT pull, however you pay the government, you owe them $5,000. And so if you were to say, let's do another $1,000 in sales through barter in a particular month. So we're going to do that. So we'll say we'll do $1,000 in trade sales. We'll do it to Mark's Auto Body here. And so it's $1,000. $1,000 generated another $130 in tax. This total of $1,130 is going to be collected in trade dollars. That means that it isn't, the $130 here is not cash available to pay the government. It is actually in trade. I gotta put an item in there. Services. And so now over on my tax return. So we went from, so right now before that we hit the recalculate button, you can see that we were going to pay $5,173.35, and now we're going to recalculate, and now we have our $630. Now we have to pay $5,303.35, which, yes, is coming out of Canadian dollar bank account. But then let's say in that same period you have an additional bill. Conveniently enough, it is going to also be for $1,000. It's also going to be in trade. So it's going to be $1,000 in trade. And when we save that, and we look at our tax return. So again, that $11.30 has been paid in trade, not in Canadian dollars. And we go in there and we look at tax return. We just dropped back down because the input tax credits went up. We're back down to the $5,173.35. So in a period where your sales and your expenditures in trade line up to being roughly the same, and therefore your HST collected and the input tax credits that were created as a result of spending in trade and spending GST HST in trade, your net impact on that tax is completely neutral. In periods where you are doing more sales than you are purchases, then your net tax, you are remitting Canadian dollars to the government as a result of doing business on trade. But conversely, in the periods where you are utilizing more trade than you are taking on, then you are actually reducing the net tax you have to pay. So if, let's say in this period I had another $10,000 purchase that I made in trade, and that purchase had another $1,300 worth of HST on it, which is as an input tax credit, then I would be able to draw down, my input tax credits would go up to $7,100 roughly, and my net tax owing would drop to about $3,800. It doesn't mean that I'm getting that $1,300 cash back per se, but it just means I'm putting out $1,300 less to the government. So on the GST and HST, it does completely wash that way. In